promise, pretty quickly. And every Tuesday at 7:35, we sit down and we visit with the Arizona Benefits Specialists. The experts from Arcwood Consulting come in for a 10 to 15 minute segment talking about a lot going on with benefits, whether it's health benefits, 401k, HR. And this morning we invite Brandon Oliver back to the mix. He is with Arcwood Consulting, and he has brought a friend, Shawn Parker with MGKS. And I have a weird feeling I know what we're going to talk about today.
Yes,
this
sir.
act that I keep reading about all the time, because I think it's going to be pretty big for 2020, the Secure Act. But first of all, gentlemen, good morning.
Good morning.
Morning.
How are you?
Good.
Doing good.
So Secure Act, let's, Brandon, I'll have you explain as quickly and painlessly as you can. Because still a lot moving with this, right?
Yeah, there's a lot of movement with this, and you guys have a lot of advisors on your channel, and I'm sure they've been talking about it for the last 2-3 weeks. Especially your financial planners are probably talking about all the effects of moving RMDs up to age 72.
Right.
Removing the stretch IRA provisions for most inherited IRAs to beneficiaries that are non-spousal. You have a lot of estate planners on here talking about those same things. So we're not really going to cover any of that today. We'll probably just talk about some of the effects that the Secure Act is imposing on group retirement plans like 401ks and 403bs. To that vein, that's still a lot. I don't think our little spot here can cover it today.
No, we might have a 2 or 3 parter here.
Yeah, I think we will. So in the future, I really want to talk about the parts of the act that are going to have effects on multiple employer plans. I think that would be really interesting, and maybe if Shawn can join me for that as well, that would be good. And then really another one I want to do is the reason this whole Secure Act came into being, I think, in my opinion, is really, you just got to follow the money. And it all came from the insurance companies who want to get annuities into 401ks.
Mm-hmm.
So I really want to talk about that a little bit. I don't know much about the products yet, so I'm going to research that. But I think that would be a good segment as well. But today we're just going to talk about some of the small changes that just are happening to 401ks as they exist today. The biggest one's really just kind of being timing of documents and plan startups. I'm going to let Shawn do that because he's the specialist.
Yeah, and Shawn, I have you get a little closer to the mic, by the way. Shawn Parker's with MGKS, which is Matthews Gold, Kennedy and Snow, the top TPA firm in town. Basically, CPAs keep your books in line, TPAs keep your financial 401ks and retirement plans in line.
Exactly.
Is that a good analogy to
you
let
can
people
think
know
of
what
us
you
as
do for a living?
The CPA for the retirement plan.
There you go.
So design, implementation, administration, that's our forte. We don't do anything with the assets.
Very cool. All right, so let's get into it. Let's
All right,
high
good
overview
deal.
and
So,
see what we can knock out in 10 minutes.
One of the most exciting things I think for my practice is the fact that you are now allowed to adopt a retirement plan clear up until the due date of your tax return, similar as you would be able to do with a SEP. So previously, in order to sponsor a retirement plan, you had to have it signed into place by December 31st of the year you were looking to take the deduction. Now they've pushed that out, and you can actually adopt it all the way up until probably October 15th if you extend. However, these plans technically still need to be funded by September 15th. So you're not going to be able to put a 401k in place after the end of the year because your deferral actually has to be funded during the year. However, if you want to do an employer-funded plan, such as a profit sharing plan or a cash balance plan, you can call me all the way up until September 15th. We could jam it in and you can get a deduction for the prior year. I'm not exactly sure how it's going to work out with the fact that we are adopting plans after the extended due date of the actual 5,500. So that'll be interesting to see how the IRS adapts to that. But it's a big opportunity for us in the sense that, we could pick up some new business, and sponsors that really don't know what their tax liability is clear until the next year, they can now say, oh shoot, I messed up, I'm going to go put a plan in retroactively and get a deduction for it.
Right. I have heard some whispers, and I don't know if you know the exact answer to this, but I know you mentioned the multi-employer plans. We'll probably save that for another day because I think that's a little more detailed. But there are possibly going to be some incentives for businesses that don't currently have a 401k. Can you touch on that?
Yeah, sure. So the small employer startup tax credit is a big opportunity for employers to offset the brunt or the upfront cost of retirement plans. So historically, you could get a deduction or a credit of about $500 for starting a plan. Well, the Secure Act kind of expands that, and the limits are now either $500 or the lesser of $250 per non-highly compensated employee you have in the plan, or a maximum of $5,000 per year for 3 years. So big opportunity for the startup plans to offset the cost associated with startup plan.
And depending, I mean, if you got 5,000 back, I mean, to start a 401k is not. I don't think it's 5,000, right? I mean,
yeah, it's about break even.
Yeah. Really?
Or if it's, I mean, it's a credit, and that has to only go to the expenses of starting a plan. So no matter what, like let's say you go with the least expensive provider you can find, like Ubiquity or 401k online or something like that. Still, even if it only costs you $3,500 or $4,000, you can still only use it to that. So best case scenario, my consulting fees just went up $1,000, and we're good.
Understood. Okay, so you're offsetting it, but that's a big deal. Otherwise, in the past, that $5,000 comes out of my pocket,
Yep.
Mr. Business Owner. Correct?
Exactly.
Yeah. So it's a real good time to start a 401k if you've been thinking about it for a long time. I mean, the hard cost to an employer of managing a retirement plan at minimum for a small employer year in, year out is going to be about $5,000. So if you can at least offset that for a couple of years, that really helps you out. There's still all the other things, all the work that goes into it and things like that, but maybe some of the legislation in the Secure Act, as it revolves around the multiple employer plans, we can talk about taking some of that off their plate too.
You are listening to the Arizona Benefits Specialist segment. We do it every Tuesday at 7:35 right here on Money Radio. Brandon Oliver with Arcwood Consulting and either Peter Rowe are always here in studio with us. Today, Brandon brought a guest, Shawn Parker with MGKS, talking a little bit about some of the changes for 401k plans that could be coming in this year. Now, this is just a generic thing that we'll just throw out there. 19,500 is the new limit. If you are of 50 or older, you can actually go all the way up to 26,000, I believe, for the year. It's an extra 6,500 catch-up provision. So
Correct.
The numbers have gone up a little bit. That helps.
Yep. Certainly does.
All right, so let's talk about some of the other intricacies, some of the things you guys at MGKS or Arcwood are keeping your eye on right now. And will this be, is there going to be a mad dash for like all these advisors that do 401ks? Is this year just going to be nuts? Like almost to an annoyance?
Maybe a few years from now.
It's
going
to
take a while for the industry to catch up and actually figure out everything that the bill changed. So with the fact that we're now allowed to adopt these plans after the end of the year, I think that's going to be a big influx of new business. But we'll see how it goes.
I think the salespeople will use it anytime legislation comes in that can have an effect on somebody's group retirement plan. All of the maybe payroll people, they'll be knocking on the doors, making it seem like people have to do something, and all of a sudden there'll be more activity, and people will be calling their advisors saying, hey, this really good looking person from XYZ is saying, hey, come do a 401k, you have to now, or whatever. Just like we did with the fiduciary laws, we saw a lot of that. But really, I think all the activity is going to come more on the small business side with maybe these professional service organizations like doctors, lawyers, who have an extra, $1 million tax liability at the end of the year, and they're like, oh, yeah, now I can actually do a 401k or a cash balance after the fact, get a big deduction, get under those limits and things like that. We'll see a lot more of that, but just the small business startups, I hope so. I really want to help some people do some, especially with the tax credits, but I don't think it's going to be a bunch.
Right. Shawn Parker, MGKS, why don't you throw out a contact number for yourself or email? Or
Sure. So my contact email is sparker@mgks.com, and you can reach me at 602-296-3103.
There you go. And of course, Brandon Oliver, Arcwood Consulting, not just the 401k space, although that is your expertise. You guys do the health benefits and, of course, HR, which we actually talked about a little bit last week. That was fun.
Yeah. You like how my guest actually showed up?
Ooh. Oh, he showed up.
Oh, did he? You just wouldn't let him in?
Well, no, the segment was over.
You're like, I'm not letting a lawyer in here right now.
I said, listen, dude, we got time. This is live, baby. This ain't Memorex. So, yeah, he felt pretty bad, I think. But we said, yeah, we'll come back next time. And next time you'll get here at 7 or 7:35. Start. All right, let's throw out the information on how to get in touch with you guys. If people do have questions, if small businesses, if someone says, hey, I don't want to wait a week until you tell me what a multi-employer program is, how do I find out? Call you at Arcwood.
I'd say just call Shawn and he'll get a hold of me. No, I'm kidding. The best way to get
You see what he's doing here, Sean?
It's true. It's true.
He was really busy at the end of 2019, and now he's like, I don't want to.
I'm just going on vacation.
Yes, exactly.
No, the best way to reach anyone at Arcwood is probably just our main number, which is 602-726-6280. If you have questions about the changes to your retirement plan coming into effect this year, give us a call. Or if you have questions about your health benefit plan renewals, or maybe you need some help on the HR side, you can always give us a call and just ask for those departments. We'll tell you someone.
Very cool. Brandon Oliver and Peter Rowe are investment advisor representatives offering advisory services through Arcwood Financial LLC, a registered investment advisory firm. They offer employee benefit consulting and brokers offering group insurance and self-funded employer-sponsored employees benefit plans through Arcwood Benefits Consulting Incorporated, and they offer human resource and business operation consulting through Arcwood HR LLC. All three of those companies are independent companies. Arcwood Consulting does not offer legal, tax, or compliance advice. For questions or to request more information, please call them at 602-726-6280 or email info@arcwood, arcwood.com, and that is Tuesday's Arizona Benefits Specialist here on Money Radio.
You are listening to Business for Breakfast. Stick around because Business of Sports is coming up. It's going to be a good one this morning because Mark and I are both wearing our all-white throwback ballet outfits.